First up, the day's market action then, where Dalal Street witnessed a tug-of-war between the bulls and the bears today. A global risk-off dragged the Sensex and the Nifty for the second straight day, and the Sensex ended a point below the 35,200 level, while the Nifty just about held on to 10,600. The banking index and the mid-caps outperformed significantly as both the indices closed 0.5% higher. Shifting focus then to oil markets then, where a 6% plunge overnight took place. The price of Brent crude has jumped over $1 and NYMEX is up nearly 2% in trade, and the rebound came after reports suggested that US commercial crude inventories last week fell unexpectedly by 1.5 million barrels. Now, record crude imports by India of almost 5 million barrels per day also supported crude prices. And even as the central bank fears about the quality of select NBFC loans, the government is calling for new measures to address the liquidity challenge. Union Minister of State for Civil Aviation Jayant Sinha spoke to Shireen Bhan earlier and asked the central bank to examine the need for unconventional moves to boost liquidity. Now, Sinha believes that NBFC sector is struggling without liquidity and that is hurting their ability to lend. He also went on to say that policymakers are worried about the tightness in credit in the economy.
The circumstances that we are facing, the high NPAs, the liquidity shock that we've had for the NBFCs, the growth of the shadow financial system, the consolidation of the public sector banks that we're trying to go through, all of these are a particular set of circumstances, and under those circumstances, we really do have to think about, how the role of the RBI itself should evolve. Should the RBI undertake more bold decisions around this? Should they take unconventional steps to strengthen the financial system? And I'd like to remind you, Shireen, that every time there has been a financial crisis in the West, whether it's in the US or in America, in England or in Japan, there has been an evolution. Institutions have responded to those challenges, whether it was quantitative easing, whether it was the unprecedented negative interest rates that we had in Japan. Central banks are prepared and capable of doing unconventional and bold things as well. I think we need to examine that in India also.
Okay, but we're not, are we in the midst of a crisis that requires such unconventional thinking and an unconventional approach? Are we in the midst of that kind of an economic crisis?
What I'm saying is that there is one aspect of the economy, of the financial system, not the economy, the financial system, which is the shadow financial system, which is the NBFCs, where we have gone through a liquidity shock because of what happened with IL&FS. Now, in that particular segment of the financial system, do we need to do some unconventional things? Do we need to think about what else RBI can do? Okay. Also, we are dealing with an NPA situation that is unprecedented because of the promiscuous kind of phone banking that was going on in the UPA government. We have to deal with that issue as well. We are dealing with it. Under those circumstances, is the RBI and its role going to evolve? Of course it should. And that is a discussion, that is a collaboration that has to happen between the RBI and the government. When it comes to the NBFCs, obviously they are facing a liquidity situation where they can't borrow at the rates that they were borrowing earlier or get the kind of liquidity that they were getting earlier on the wholesale financing side. And as they face tightness as far as wholesale financing is concerned, as they try to be more prudent in their lending, what is happening is that as far as their lending is concerned, as far as their disbursement is concerned, we are seeing very significant tightening there, and that is credit that's not going into the economy, and it's particularly not going into the MSME sector. So if you step back and look at what's happening in the economy as far as credit is concerned, that is something that as policymakers, as all of us who worry about how fast the economy should be growing, how fast investment should be growing, are concerned about. Now, what exact actions have to be taken, that really is for those who are in charge, those who are responsible, to figure out and make the appropriate trade-offs.
All right, now veteran banker Uday Kotak says he's happy with the outcome of the RBI board meeting, and terming that outcome as positive, Kotak said that the decision will ultimately help the economy.
No, I'm very happy that there is positive outcomes which ultimately will help the economy, and I'm glad that the board had a debate, and I respect the judgment of the board.
Well, speaking of the differences between the RBI and the government, disagreements between the government and RBI may not be disruptive for the global investors currently, but it is now on their radar. That is the word coming in from James McCormack, MD and Global Head of Sovereign Ratings at Fitch Ratings. Now, while speaking to cnbc TV 18, McCormack added that we are likely to see more disagreements globally between governments and central banks in 2019. Here's a slice of that conversation.
When we look at big emerging markets, the potential growth rate here in India is by far the strongest. It will grow stronger or faster than China for the foreseeable future. That's something that we expect to continue. That's fundamentally a pretty positive story. That suggests to us that the macro policy framework is a good one. If we look at the consolidated general government balance, so the fiscal balance, it's improving for the central government, but deteriorating at the level of the states. So a combined balance hasn't really changed either.
All right, but what do you make of the very public tensions between India's central bank and the elected government on a whole host of issues surrounding regulation of banks? Is that a serious risk from the investor's point of view, the standoff, so to speak, between the government and the regulator?
Well, it's certainly going to get investors' attention, and I think investors are starting now to tune into this story. It's not necessarily something that makes investors entirely comfortable if you've got policymakers in open disagreement with each other. I think we're not really at the stage yet where it's disruptive for international investors, but it is now on the radar screen. And I should say that this is something that we're seeing play out not just in India, but in a number of countries.
All right, let me then close by asking you, what will be a trigger for a rating action for India, positive or negative, if you could give us both of those?
Well, I think in both directions, it's really the same issue. It all surrounds public finances. So if it's an increase in government debt from where we are today, that would be potentially problematic, given that the debt level is already relatively high. And I think conversely, if we were confident that the debt profile were going to improve going forward, that would give us some confidence in moving the rating higher, because in terms of the external finances for the country as a whole, which have been getting a lot of attention, not something that really gives us cause for concern.
All right, now here's the latest in the Yes Bank case. Now, in a bid to restore investor confidence and arrest the fall in the bank's stock, Yes Bank's managing director and CEO Rana Kapoor and board member Brahmadat released this joint statement late last night, acknowledging for the very first time that a truce was in the offing between the warring co-promoters. Now, Yes Bank said that efforts for a mutual resolution with Madhu Kapoor and her family are currently underway, which would ensure better support and coordination with the board. Referring to the recent board resignations, the statement further said that the exits would have no impact on the selection of a new MD and CEO. Now, the bank has said that the CEO selection process is on track as per the committed timelines, and the search and selection committee of the board is scheduled to meet on the 12th of November to discuss the final shortlist for Rana Kapoor's successor. Further, the bank has also advanced its board meeting to 13th of December to consider the appointment of a new chairman, two independent directors to replace the departing ones, and to review the progress of the search and selection committee. And here's the big story from the aviation space, where the Jet Airways stock rallied over 6% in trade today on the back of a cnbc TV 18 news break that Naresh Goyal and Etihad are in advanced talks to infuse liquidity into the cash-strapped airline. Now, this is an attempt to avert a distressed sale to Tata Sons. Nisha Podar, who broke that story, joins us with more details. Nisha, take us through what you're picking up on this deal.
So sources with direct knowledge share with us that Naresh Goyal, the promoter of Jet Airways, is in advanced talks with the large shareholder of Jet Airways, Etihad, to really work out a solution for the immediate financial needs of Jet Airways instead of going ahead with a sale at lower valuations. They also think that what other players like Tata Sons could offer could be a distressed sale kind of a scenario, which needs to be averted at this point. So the restructuring and the deal that they are working on could immediately infuse about $150 million into the company. What they are discussing at this point is that Etihad Etihad with controlling 50.1% stake in Jet Privilege, which is a step-down company, could really merge with the company and free up the $150 million cash in that, which can be utilized by the airline. On the other hand, in lieu of this particular stake in Jet Privilege, Etihad could get a higher stake in the parent company Jet Airways, increasing it from 24% to above 35%. They both, Naresh Goyal as well as Etihad, could be even equal partners after this particular transaction. Then both put together can bring in more cash into the system as well. The experts, analysts have said that of the $1.1 billion of total debt on the books of Jet Airways, immediate requirement of $300 million needs to be met. So these are the talks going on. We do gather Naresh Goyal is in Abu Dhabi to really decide on this particular negotiation. If this happens, any deal on the front of Jet Airways would be called off, but we still have to see how this goes.
Well, Nisha, thank you very much for bringing us that. Now, let's look at some of the other business headlines that we're tracking for you today. Now, shares of Dr. Reddy jumped 6% after a US court ruled in favor of the company to relaunch the generic version of Suboxone, which is used to treat drug addiction. Shares of Wockhardt also surged in trade, with the stock gained about 3% after the US court rejected Johnson & Johnson's request to prevent generic companies from selling drugs. The order will allow Wockhardt to sell Zytiga in the US. Expect production of 4.2 million tons per annum from Bhushan Steel. That's the word coming in from TV Narendran, the managing director and CEO of Tata Steel, who was speaking at the sidelines of the CII CFO Summit. He said that the company will continue to focus on inorganic growth in the long product segment.
So in longs, we will be looking more at inorganic opportunities if they come our way. Usha Martin was one such opportunity which came our way. As I've said, if you look at the India capacity, basically a roadmap takes us to about 24-25 million tons today, including the Kalinganagar expansion and Bhushan Steel. Right. But in that 25 million tons, there's hardly 3 or 4 million tons, which is long products. So that's why going forward, while in Kalinganagar, we have the opportunity to expand through brownfield, and even in Jamshedpur, we can unlock some more volumes through brownfield expansion. Inorganic growth opportunities, we will be more interested in long products going forward.
Maruti Suzuki today unveiled a new version of Ertiga, which is categorized as a multi-purpose vehicle in India. The car is priced at 7.44 lakh rupees, and this is for the first time that the model has received a complete revamp with a K15 engine with a 32-litre capacity. And here's the big development from Jammu and Kashmir. We learned that an alliance between Congress, National Conference and PDP has been finalized, and an announcement is expected very soon. Remember, earlier in June this year, the Bharatiya Janata Party had called off its alliance with PDP, and the state since then has been under governor's rule. So if the PDP, the National Conference and the Congress form an alliance, they will have enough numbers to form the next government in Jammu and Kashmir. My colleague Mufti Islah spoke to PDP MLA Altaf Bukhari a while back. He asked him about the rationale behind this imminent alliance. This is what he had to say.
Main agenda is to defend the special position of Jammu and Kashmir, our special identity 370, 35A, which is under attack. This is the first time it's under attack. To defend it both legally and politically, this alliance is coming into picture.
Who got this idea first? People from Congress, National Conference or PDP?
I think leaders from all the parties got this idea, because this is responding to the aspirations of people of Jammu and Kashmir.
Do you think that because all of you are, different parties, you have different ideologies, this is going to stick in long future?
We have a common agenda. So I think the agenda is bigger than our ideologies. And by the way, what are our ideologies? Our ideologies are to serve our people, to see that our state progresses. And if our identity is lost, even if we touch the sky, it means nothing for us.
What is that agenda, sir? Could you spell it out?
The agenda is your special identity, 370, special status, 35A, all those things.
Tell us that how many days it's going to take for
I think very soon. I think very soon. I don't think
24 hours. Would you?
No, I don't say that 24 hours or 48 hours. Very soon you will find it.
All right, very soon, that Grand Alliance in Jammu and Kashmir. Now, here's a big national story that we're tracking for you. Farmers in Maharashtra are on a march for their long-pending demands of drought compensation, farm loan waiver, among others. Over 20,000 farmers belonging to different parts of Maharashtra, including Vidarbha and Ahmednagar, began their protest march from Thane today. Now, this march will culminate in Mumbai's Azad Maidan tomorrow. The protest march has been organized by the Lok Sangharsh Morcha. CEO of that African conglomerate, who also, according to Forbes, is the richest man in Africa, Mr. Dangote. Welcome to the show. Let me start by asking you, your group has had a long association with India. Could you give us a sense of how this engagement will be taken forward?
Well, the engagement going forward between us and India definitely, depends on how much of sort of support we continue to get, especially from the government of India in terms of export credit. Right now, without any government support, we've been able to deal with India in the areas of machinery, technology, and also technical support. At the moment, we've done a transaction much more than $3.5 billion in the last 4 or 5 years.
So, does the Dangote Group also have any plans to invest in India or acquire stake in Indian companies in the future?
Well, definitely, yes, we'll do that. Like what I have said earlier on in my previous interviews is that we will look into other opportunities outside Africa from 2020, because we would have finished all our projects in Africa, where we are now spending about $18 billion. But as soon as we finish, yes. But I think the best way for us to enter India is through collaboration with a local company. We don't really want to come and set up anything on our own here.
Okay, so even if you're speaking of collaboration, what are the most attractive sectors for you where you might look to invest in India?
Food sector, which is extremely very, very good for us, is to look at also cement, which is a business that we're already doing, and to look at, sort of petrochemicals, which is also a sector that we are well, aware of, and we know it in and out. The issue is that with our company, Dangote Industries, we always like to go into sectors where we know it very well. We don't want to go and create, a new sector. But having said all this, you cannot beat India when it comes to technology. And when it comes to IT, we would like to look at local companies where they're either doing great or they are looking for partners from all over the world, and we will be a good, we'll have a very good relationship with them.
Well, Mr. Dangote, you're also building one of the largest oil refineries in the world in Lagos, and we understand that several Indian companies are also engaged in this project. Could you tell us more about this?
Well, the issue when you look at it, we already have an office here in Delhi. And we're also working with the, a lot of companies. The detail engineering was done by Engineers India company. And then the equipment that we bought, I think they have crossed over $2.7 billion, all from, India. And we're building one of the largest gas pipeline in Africa, 550 kilometers, which will end up also going to one of the Indian companies that have actually quoted. So there's actually quite a lot which we are doing with the Indian companies, especially to do with the refinery. The engineers that we have, majority of them, they are based here. And also a lot of them, they are also in Nigeria. These are the issues that we have. There's a lot of collaboration between us and India on the building of the refinery. We've gotten a lot of technical support, technical advice, and which we are very, very happy with.
All right, but before we let you go, we also wanted to understand what are your plans to buy stake in the football club, I think Arsenal. How are those plans firming up, and should we expect any announcement soon?
Well, the issue is that, yes, it's true. My own interest has always been to buy, Arsenal, and I've been Arsenal supporter since 1982, thereabout. And I think I'm still very, very interested and very adamant in buying, Arsenal. But, like what I said, right now we have massive projects in front of us. It is not a priority for me today to now deviate in doing my projects to go and be buying Arsenal. Right now, what I want to do is to deliver on my projects. From 2020, I will have the whole time of sitting down, strategizing, as we've been doing now, to see how we can get Arsenal into Dangote group. And, by God's grace, we'll be able to achieve that.